Considering Calgary real estate had a fairly slow month in April, single-family homes in Calgary have stayed fairly resilient. Is this going to continue to trend throughout 2025, or are we going to start to see more negatives dipping into some of this lower end property growth in Canada? You can see that we're actually quite low in this composite benchmark year-over-year home price percentage. We used to be in like the top 2, top 3, and we've dropped down significantly. Looks like it's now Edmonton's turn to stay within that top 5 for the time being, considering it's fairly affordable. Now, let's go and start to talk about what $770,000 is going to get you in Calgary. We need to make sure that we remember that the benchmark attributes are given to give a better context of what that's actually going to get you. So $770,000 on average is going to get you a 1995 built home with a 5,000 square foot lot, 4-bed, 3-bath with a double attached garage. Now, my name's Adam Fife, your Calgary Realtor. If you're looking to obtain some information, everything is linked in the description. I have instant home evaluation tools, I have scheduled calls, we've got top 10 things to do, and all sorts of information for free for you to consume. So go ahead and utilize that link. Now, if you want to know what your home is valued at in today's market, go ahead and scan this QR code. It's a super slick tool. Me and my team, we're going to reach out, we're going to say hi, we're going to see if you need any sort of help. If you're just kicking tires, no stress at all. So let's read what the Calgary Real Estate Board has written about single-family homes, and then let's start to unpack it all. Detached sales were at 1,100 units in April, a year-over-year decline of 16%. While sales eased across most areas of the city, the Southeast District has seen sales rise over last year's levels. April saw 1,900 new listings come to the market and saw the sales to new listing ratio remain balanced at 58%. Inventories rose to 2,500 units and the month of supply rose to 2.3 months. While this is a significant gain over the less than 1 month of supply reported last year at this time, conditions remain relatively tight, especially for those lower priced ranges, right? So let's start to unpack this all, okay? So detached homes in Calgary are still up 2.4% from last year, which is down from 1.4 from last month, but we've seen a relatively flat price decrease, right? $500, virtually nothing. It's basically stayed still, hasn't really seen much movement at all. So when we look at this chart here, you can see that the red bar is a price point, right? We saw the highs, the record highs from last year, right? It set that new benchmark price, never seen that price before. We set it again last month, which was a surprise to me, to be honest. And then this month, it was fairly expected for it to kind of flatline given the election, given things going on in our economy. Just trying to figure out how this is going to actually unfold here in Calgary, especially with this new Liberal minority government. So you can see inventories rose, which were not surprising. Sales actually increased, which was fairly surprising in a sense. I wasn't sure of how many people were going to hold off, but again, good properties still sell quick, even though that there was a lot of people holding off for the election. Good priced properties still were attractive for some, therefore pushing people to actually purchase those. But you can see that the inventory levels compared to the sales are much more than what they were last year, right? Last April, super hot sellers month, sales outweighed inventory, clearly indicating a seller's market, increase in price point. Now we're seeing a much more balanced market, a lot more options for people to choose from. So let's start to break this down into more digestible information. So just looking at April of last year, right, super quick, you can see that we had 1,300 sales compared to this 1,100 sales. New listings were pretty much the same. We were up 17%, which was fairly surprising. Inventory doubled, right, over 105 months of supply, doubled to 2.28 months. Sales to new listing ratio, massively different, over 90% sales to new listing ratio, down to 57. Sales to new list price, everything was selling over, well, not everything, but a lot of things were selling over. Now we're selling under. Days on market, things have slowed down pretty dramatically. Pretty cool to see in a sense, you know, the median price has actually stayed the same and the average price has increased quite dramatically. Okay, so there is definitely a shift to more expensive homes here in Calgary, and the benchmark price for those attributes have also increased by 2%. So year to date, we're not going to touch on this too much. This is the average for the year. The biggest thing really to notice is the sales to new listing ratio, as well as the days on market average, obviously slowing down in our market. We're not going to pay attention to these prices because we're going to break them down in a lot more detail in future slides. So when we're looking at the sales, right, sales have stayed relatively flat. Okay, we're still averaging, you know, around that year to date over almost 4,000 sales, right? We did notice a dip in April. We are down pretty aggressively from those 2024 busy months, but look at the 2022, 2021, right? Super crazy hot year. Benchmark price was like $200,000 less, almost $250,000 less, right? Things have definitely slowed down, but now we're kind of finding that new normal as to what our activity might be, right? Pretty close to that 10-year average. It'll be interesting to see if we stay at this level for Calgary real estate. Now, you can see the shift, right, for higher price properties. The red price point, the red bar is the amount of sales per year to date. You can see, obviously, last year, again, we had a lot more sales, but we're still moving towards that more expensive product here in Calgary, right? Again, just as an example, you can see this crazy blue bar from 300,000, 400, 500. That is virtually non-existent anymore with the $300,000, $400,000 prices for single-family homes in Calgary. Let's continue on here. This is the same information, just a numerical value. Feel free to pause the video. Just as an example, right? 2 million plus year to date last year, 45, year to date this year, over 70. So we're seeing a lot more ultra expensive, ultra luxury homes selling in this market. Even in April, there was 28 sales versus 11 of last year, right? And then again, not very many sub $400,000. So let's continue. Sales by property type. So this is just basically breaking it down. We're looking at detached. This is per quadrant. We see the south is most active, which is very common, right? You can see the city center is most active for apartments, and then everything else is fairly well divided between the quadrants. Moving on here, so new listings. So this is going to be an interesting one, right? We can see a rise in new listings, year-to-date averages. So we are most likely going to see this number increase, I would imagine, as we see more renewals come up for mortgages, more investment properties. A lot of investors who jumped in this market in 2020, 2021, 2022 are seeing some pretty significant gains. And I would imagine we're going to see a lot of those investment properties come to the market now that those investors have seen those increases, and is going to increase the inventory levels, which hopefully stabilizes our price point, right? So this is the same information, just in a numerical fashion. So you can see again, just the sales, the new listings, the inventory, the days on market, right? We have seen a quickening of the market, 27 down to 25. We are very slow compared to what we were last year. So the average days on market is 25 days, meaning that if you put your home up on the market, you get an offer within 2 weeks, you probably have a 10-day condition period. That's kind of what you're expecting right now, right? We've already talked about the average price, the median price being similar to last year. It did drop from last month, right? You can see that the median price, that the average of the two in the middle did fall, and then the actual average, overall average price point stayed the same from last month. But the benchmark price, which in my personal opinion is the most important price to follow just because it has attributes, stayed relatively flat. So where is this actually leaning towards in the individual markets in Calgary? So if we look at detached here, right, you can see that a lot of homes are actually in seller's territory still. Single family homes in Northeast are definitely more of a buyer's market. You can see they're close to 4 months of supply, meaning that it'll take about 4 months to clear out all of that inventory at the current rate of activity. You can see that Northwest is the quickest moving. They're still at like 1.7. Southeast and South are still, again, seller's territory, moving relatively quick, right? City Center, it's a little bit slower, closer to balanced markets, yada, yada, yada. We don't need to touch on that for too much. But when you're looking at the inventory levels, right, the actual amount of homes left over at the end of the month, we've seen a skyrocketing compared to the last couple of years, which is welcoming news, right? Now, we are starting to inch very quickly towards some of our most depressed years, 2018, 2019. We're at 2020 and 2021 levels, but we need to make sure that we're considering the fact that there have been new starts every single month, every single year for the last 5-6 years, right? So in 2018, there was 9,300 homes built. 2019, almost 11,000, right? 8,000, 14,000, 17,000, almost 20,000, another 20,000. So obviously the inventory levels are going to increase, especially with the amount of activity that we're still seeing in Calgary, right? We're still seeing people absorb that inventory, but we're adding more inventory to our market every single month, every single year. So it's pretty obvious that we're going to start to see increases in the inventory levels. So when people see this, they need to put it in perspective. Obviously, we're starting to increase, which is great news. We want to see more balanced conditions. We don't want to be in this ultra crazy seller's market. This is very stressful for a lot of people, but we are increasing it, which is good, right? It's good to see. So with the trend line, right, you can see on the last like 6-8 months, we've been relatively the same, right? Around two and a bit months for single family homes, right? We've seen a slowdown in price, but we haven't seen a significant shift. We've just stayed relatively flat, right? Yes, prices do fluctuate for seasonal adjustment, Christmas, holidays, stuff like this. Prices typically fall because things stay on the market longer. But when you start to look at this months of supply, we've stayed relatively the same movement over the last 6-8 months that we've seen prices slow down, but they're still increasing, right? The rate of growth is just not as fast as what it had been when we were, seeing some of these crazy 1 month of supply months, right? So when you start to look at this, right, you can see the Northeast for single family homes has seen the only decrease in this market, right? Everything else is still seeing year-over-year price growth, right? It's slowing down, but it's still year-over-year price growth of around 2%, right? City center, northwest, west, south, southeast, east, and north are relatively flat, averaging about that 2%. So this has been a common question for a lot of people as to why total residential prices are down, yet the benchmark prices for the average, right? You can see all the benchmark prices averages are up, right? But this is down. It doesn't fully make sense. And it took me a while to try to explain this property. So when we start to look at this, right? This total residential price point is measured off of median price, right? So what happens is that when you have a detached, so you look at last year, this is just an example. Last year you had a couple detached sales and a couple apartment sales, right? Combined prices are here, which means the median price was $400K. This year there was only one detached sale and 3 apartment sales, right? The combined median price actually dropped to $300,000. Even though the detached and apartment prices rose, the median price fell, dropping the total residential price point from $400,000 to $300,000. So what happens is that the amount of sales shifted to lower price point homes in those areas, which is actually dropping, like the share of sales have dropped to lower price ranges, dropping that total residential price down, even though the pricing for the individual property types and individual property, in quadrants are increasing. So I hope that makes sense. I'm going to bring this up a lot more, and I'm going to try to actually find real examples as to what this is. It's going to take a little bit of research, but this is a super high level, very basic overview of why the total residential price points, as an example, in Northwest is down, yet every single quadrant specifically is up. Right? So it's annoying, it's frustrating. I hope that makes sense. Please comment your questions and let me know if I even got that right. And yeah, let's have that conversation. So if you want to know what your home is valued at in today's market, yes, the median price is down, but the benchmark prices are still up year over year. Go ahead, scan the QR code, click the link in the description. It'll take you to this instant home evaluation tool. It's super slick. Me and my team will go ahead, we'll reach out, we'll ask you, looking for a refinancial. You're just kicking tires. No big deal, no stress. We're just trying to offer a free service for those who are interested. So let's start to break down the price points for the individual quadrants, okay? Get away from the total residential, look at the specifics of the quadrants, right? We're only looking at detached homes here. So you got your sales and new listings, your sales and new listings ratios, right? Again, you can see Northeast and North have saw less than 50% sales to new listing ratios, right? Just as an example, there's 118 sales, yet 271 new listings in Northeast. So the months of supply is definitely higher than most at 4 months. You can still see some properties here, some quadrants that are under 2 months of supply, meaning it's definitely a seller's market. There's things moving. It's not as fast as or aggressive as what it used to be, but things are still moving in those quadrants. So good properties still sell quick, right? You've got your benchmark prices with those benchmark attributes like I've talked about many of times. So you go here, you go and you look at all of your individual quadrants and see what are the actual attributes for these price points, your year-over-year gains, and then your month-over-month. So this is where a lot of people like to kind of figure out what is happening in their quadrant. Now, we don't end here, we start here. We look at your quadrant, and then we go back to the market. We go, let's just pick on Northeast today, right? We go to the Northeast, we want to see what's going on in that quadrant. You can see over the last 30 days, they had 600 sales. We dive down into here, we go over, and we just start to look at all the data in those individual communities. So Abbeydale as an example, you can see that there was 4 sales. They have around, let's call that 8 new listings. You can see that there was 1 listing that actually sold 6% over ask, but you can see it was a very affordable house. It was actually a 5-bedroom home that was listed for $490. It sold for $520. But majority of things are seeing some price decreases, or sorry, some sales to new listing ratios drop below 100%. As an example, here's one for 93, right? 730 sold for 680. Still sold relatively quick within 13 days, but they're getting quite a bit less than what they listed for. So again, this is not the ending, it's just the starting. So when we start to look at the quadrants, we can see that north and northeast, again, just kind of picking on them today, they saw some pretty gnarly declines from last month. The month prior to that, actually, the north actually saw a $9,900 increase. So they flatlined, right? They had an increase at the beginning of the year, then they dropped back down. Now they're kind of at what they were 2 months ago, right? You can see that west saw a $4,700 decrease, but the month prior, they saw a $30,000 increase. So they're still up about $2,500 from what they were in February, right? So we need to put this into perspective, right? You can see East, surprisingly, has actually seen 2 consecutive months of $4,000 decreases, even though, that was Northeast, I guess. But yeah, so again, following along with this, trying to put it into perspective, looking at the market, diving into what the data is for your specific area. Buyer, seller, investor, doesn't matter. Let's go into the MLS. Let's play with the numbers. Let's actually go and look at some stuff, articulate it, break it down, and try to put it into perspective for your personal situation. So I'm going to skip that. Now, the market for the single family homes has seen declines. Year over year, increases, falling ever since Q1 of last year. Are we going to dip down into the negatives? It's a very real possibility, right? When we start to look at these prices from last year, right? If we stay relatively flat or even start to decline even a little bit in the detached market, there's absolutely going to be some year-over-year declines. I don't think right now, today, I don't think we're going to get to the lows of like 750, 745. So if we do get into the year-over-year negatives, I don't think we're going to stay there very long, but I'm pretty sure we might dip down and dip back up because I think that Calgary still has some growth. I don't think Calgary is going to crash. I don't know why that's so, what do you call that? I don't know why that's so, I can't think of the word right now. Contentious? I can't think of the word. I don't know why that's just so whatever. People just seem to think that Calgary's going to crash and burn and fall apart. I just don't see it. I just don't see it quite yet. Controversial is the word I was looking for. I just don't see it. Yes, we might have a slowdown. Yes, we might see some slowing of the market in general, but I just don't see the crash, right? I don't see the pricing going to fall too far, right? If you start to look at some of the stuff that Alberta's doing in general, right? Oil production, yes, of course, we are not completely dependent on oil as we used to be, but it's still very important to realize that oil production in Alberta is still hitting new upwards production goals, right? We have some pipelines that are being built and some things that are being done, some corridors that are going to be opened. So the oil and gas really isn't doing that bad. There is some new supply coming from OPEC. I get it. The oil pricing in general is not doing the greatest, but we're still seeing some good investment into this field, which is going to help Alberta's economy kind of stay afloat, as well as the home pricing, right? Calgary, Edmonton, still very attractive for a lot of people coming to Alberta, right? I think that with this election, if anything, we're going to continue to see migration come to Alberta because of the election. I still think that we're going to see interprovincial, international migration coming to Alberta. There's still so many people that have moved here that have not purchased homes yet, and they're waiting for that market to maybe soften a little bit, slow down a little bit so that they can make their moves. A lot of people came here and they rented. A lot of people came here looking for new opportunities. Our job market isn't really the best right now because there's so many new people that came here, but a lot of those people did come here with successful jobs looking for homes to live in. So I just don't see it yet. I don't think the Liberal government will allow it to happen yet. I think that Carney's going to probably do some things right off the hop to try to, get us excited and get us kind of confident and comfortable with the policies that they're probably going to make. But it'll be interesting to see how that actually unfolds over the next couple of years. It's going to be very fascinating to see what the separatist movement has to offer. I don't know if it's going to actually get some traction. From my research and what I've learned about the process of it and actually what would need to happen for it to actually be done in Canada, seems like it's quite difficult to achieve. Yes, we're going to have a referendum. Yes, people might vote for it. But then when you actually look at the policy aspect of it and what needs to happen from each individual province as well as the federal government, I just can't really see it happening quite yet. And that's probably going to be quite a while before that actually comes to fruition. So Let me know your thoughts. Let me know your comments. I'm more than happy to have a conversation. If you want to dive into your personal situation, look at buying, selling, investing in the next 1 to 2 years, go ahead, book a call. More than happy to have a conversation with you. I love this stuff. It's very entertaining to me. It's fascinating. Going into the market, learning about it, diving into the specifics of it, talking about price per square foot and what's going on in those communities is very beneficial. So don't think that booking a call, 6 months in advance is a waste of time, because it's not. Having a call well in advance definitely makes sense for your personal situation, trying to get you as educated as possible. So thank you very much. I ranted on there quite a bit. We'll see you on the next one. Peace.